Welcome back, everybody. Sive Morten is here with the ForexPeaceArmy.com. Let's take a look at the gold market once again. So, the firing of the Lizzie Cook from the Fed has made a lot of noise and hype in markets. You could see the dollar has raised recently as increasing of the risk of the independence of the Fed, correspondingly gold rising as well. But currently, the effect seems that it's housing gradually, and we see the retracement on the gold market as well. But overall context for now remains bullish, at least on the daily chart. Recently, we also have got this bullish reversal bar, which is great. And currently, we should just find some vital points that could let us to control them and make the correct decision on the possible progress of the price action. So we need to know what points to watch when the overall context still remains bullish, if they will be broken, what will happen in this case, and so on. So on the daily, we do not have a big changes. Context remains bullish, trend remains bullish. Recently, we've got reversal bar, bullish reversal bar, so which is actually great. So we can see in recent couple of weeks we have three bullish reversal sessions. Reversal happens when actually market creates new lows but close above the top of the previous session, and that has happened 3 times, you can see. So on the 4-time frame chart recently we said that maybe it is not best point to consider position taking, because new position taking, our initial entry has happened right here on the bottom and around the confluence support area according to the training plan that we have prepared. We said that that will be nearest target, mostly has been reached, and you can see this COP extension is the 33.97, and we said that's probably we need to get more confidence that market indeed is coming higher before considering the new long position. But today we could try to create some trading plan, although we do not have some really superb patterns or some superb trading setups, but at least we can find some compromise with the risk that might be accompanied with this trade, which makes it reasonable. So, particularly speaking, I am interested with the picture that we have on the hourly chart. You remember that we turned to big head and shoulders pattern here, this one, right? So, and it's well, classical target stands around 34.19 area. This is the OP, AB equals CD. We suggest that this is the bottom of the right arm, because now market already stands above the neckline, and that's obviously the bottom of the right arm. And currently market has reached the minor COP extension, some intermediate target, which is a 618. So when market hits the COP and we're dealing with the head and shoulders, the one thing that we do not want to get is the drop down below the bottom of the right arm. If market somehow, because this action from the bottom of the right arm should become the continuation of the head, where markets then aimed on the OP target. If this hasn't happened, market somehow after reaching of the minor target drops and moving below the below the right arm, it means the hand shoulders is failing, and in this case you could make the bet on a drop below the lows of the head, which is 33.10. So that's why we could say that this is vital area. So a market has to stay, if it is bullish, market has to stay at any reason above it. So another point to watch for is a neckline. It is preferable, of course, that bullish market, if it already has broken through the neck, it's better if it will stay above it. Yes, it might show some reaction on minor target, but it will be great if it stay above it. Correspondingly, this helps us to create the trading plan. So we know invalidation point, we know support levels, which is a neckline, and take a look here, we have a confluence, 33.62, 33.67. So yes, we have here some kind of the divergence, which is actually not great to current circumstances. It suggests the drop below these lows, but divergences are very tricky. I prefer to use them when I see it on some strong support area, which is not a strong resistance area, sorry, which is not the actually case for now. And I would consider it only as some additional thing if we will see a clear bearish signs. All these discussion that we have made already leads us to conclusion that conference area seems interesting for a possible long position taking, because risk in this case will be not very big. It's approximately $10. Just below the C point we will have to place our stop. This is rather strong support area, and in the first touch of this level we could get healthy pullback, which is led us to move stops to the break-even immediately, protect our position. If later even everything will be broken, the market will just keep going lower. At the first test, that might be really helpful, handy to move stops to the break-even. So, and that in fact will be, well, more or less acceptable retracement that we could take before upward action will continue. So from this standpoint of view, this is optimal area to consider possible long position taking. Another option that exists, you could probably split your position in parts. If you are sure that market will keep going higher, you could take, for instance, very small position right at the neckline, because we do not know what will happen. Well, maybe market indeed will start action here, right from here to the upside. This also might happen. So take here 15-20% of your position and wait and see what will happen. If market drop lower, you will get more. So reasonable approach as well. To consider shorts, as I said, we need to first get the clear signs of the failure of this pattern, and don't forget that daily trend remains bullish. So currently we do not have necessary background to consider taking the short position for now. So that's why we're not considering it. That's probably all that we could say currently. If you like this idea, maybe it will help you somehow decide. We have specified levels, we have specified vital areas, we have specified risk and target. So what else we could do? Probably nothing. See you next time. Tomorrow, as usual, we take a look again and maybe make another adjustments here.